Hello everyone, welcome once again to Trade with Popa. Today we are going to be talking about introduction to indicators. Let's get right into it. In Forex, indicators are mathematical calculations based on historical price and volume data. These calculations are used to analyze market trends, identify patterns, and predict future price movement. Traders use indicators to gain insights to market behavior and make informed trading decisions. If you can look on my right hand, there's a bunch of indicators on the screen. We have the RSI, we have a Bollinger Band, we also have the moving average lines. These are what indicators look like, and this is what they do. They most times tell trend, tell the prices at the high point, price at the low point. They help traders gain insights on what to do. So if you're coupling indicators plus your technical analysis, you're doing something that is 100% for yourself. Now, there are 4 types of indicators. The first one we have is the trend indicator, the second, the volatility indicators, third, momentum indicators, and fourth, volume indicators. Now, the trend indicators, this type of indicators help traders to identify the direction of the prevailing trend in the market. For the volatility indicators, these indicators measure the speed and magnitude of price movement. And then we have the momentum indicators that measure the rate of price change and helps trader identify the strength of price movement. And lastly, the volume indicators that help analyze trading volume to determine the strength and weakness of price movement. Now, traders often use a combination of indicators to confirm signals and make more accurate prediction. Remember when I said you're doing something that is 100% for yourself? This is what I mean. But there's nothing that's 100%, so you're trying to give yourself an edge by combining indicators with technical analysis to make accurate predictions about future price movement. However, it is important to know that no indicator is perfect, and they should be used in conjunction with other forms of analysis and risk management strategies for effective trading decisions. And let me show you an example of what indicators look like on a real chart. Let's get to it. So on my charts, I have 2 indicators. Down here, I have the RSI, and up here, I have an EMA line, a 50 moving average line. Now, the 50 moving average line is an example of a trend indicator. It helps tell you the prevailing trend in the market. I'm currently on the daily chart, and as you can see, when price was trading below the 50 EMA line, price was said to be in a downtrend. Price trading above it, price is said to be in an uptrend. Price trading above, uptrend, pullback, uptrend, pullback, consolidation, break below, retest, downtrend, pullback, consolidation, little, break above, retest, continuation, uptrend. The price is currently still trading above it. Now, this is what this technical indicator is telling us. But then, with technicals, we can also confirm what it's telling us by drawing a trend line. Saying, okay, technically saying price in an uptrend. Trend line is also saying we're in an uptrend. So, we're in an uptrend. We're waiting to see if this uptrend would be broken. As simple as that. Now, down here, we have the momentum indicator, which is the RSI. RSI tells us when there is increase in momentum, loss of momentum in the market. RSI tells us high and low price points. When price is losing buying momentum, when price is losing selling momentum. How I use the RSI is to tell when price is at the point where I should be looking for buys, which would be at this green level, which is the oversold level, or at the point where I should be looking for sales. So anytime I see my RSI on this green side, it's letting me know price is at a low point for me to buy. Now, because price is at a low point for me to buy on the RSI doesn't mean I should just come to my chart and buy. I have to combine that with the technicals, current prevailing trend. So in an uptrend, we want to buy, right? In an uptrend, we want to buy. So how would I use this RSI in an uptrend? I know in an uptrend, I want to buy. So when price comes to a low point or a buy point in an uptrend, I want to buy. In this scenario now, here, when price was here on the RSI, this is a low point. It's close to the 30%. It's close to the 30%. And then on my charts, look at price here. Look at price on my chart. Price is at a demand zone on my chart. RSI say price is at a low point on that same level. So look at it. Price is at a low point on my RSI. Price is at a demand zone. Technical is confirming I should look for buy. RSI is telling me this is a good place to look for a buy. It's a low point. Then I buy from here. My SL just below this demand zone. This is just buying blindly now, not doing fine tuning or anything. Look how I was able to combine the RSI plus my technicals to going long here. Based on price was in an uptrend, I'm looking for the next low price to buy at. RSI tells me this is the low price, and I can confirm that there's a demand zone there, and I go in long. And look, I won that trade. Still in an uptrend. Still in an uptrend. RSI tells me this is another low point, and this is a breaker. RSI tells me this is another low point for me to look for buys, and I can see price also as a demand zone. I go in long there again. And I'm still in profit. Let's do a sell scenario. Let's do a sell scenario. We're in a downtrend according to the moving average. A downtrend according to moving average. So anytime the RSI comes to this high point, it means I should look for sales. So RSI is at an high point here. RSI is at a high point here. And you can see price at this other block, supply zone. So combining this information, combining price here, RSI at an overbought position, it means I can go in for a short. So RSI is telling me price is high enough for me to sell. And then I see that prices are high enough for me to sell at a demand zone, a supply zone. And price is also trading below the moving average, which is a directional, a trend-based indicator. Combining this information from the RSI and the other block on my price charts, technical analysis, plus the indicator, the trend indicator, moving average. I can go in for a sell here. And voila, I'm in profits. So much profit. Another instance where the RSI will tell you what to do in a trend. Look here. This point here is a low point for me to buy. Price was at this demand zone in an uptrend, trading above the moving average. Price at demand zone, RSI saying price is at a low point. Everything aligns. I buy here, it goes up. So that's how I use the RSI. And the RSI can also be used to tell divergence. But I really don't trade divergence. But I just use the RSI to tell me, to confirm, not tell me, to confirm price is low enough. So when I see price at a demand zone and my RSI is at an oversold zone, it's like a double confirmation to go long at that level. When I see price is at a supply zone and the RSI is at an overbought level, it's a double confirmation for me to go short at that level. That's how I use my RSI. So that's it on indicators. Over time, you learn to use them properly. My RSI setting is not the regular, so you want to play with the setting and know which one works best for you. For me, my RSI is a setting of 4. Play with it and know which one works best for you. That's it on indicators, guys. Thank you for watching.
Thank you so much for watching, guys. Subscribe. Don't forget to like, comment, and share this video.